Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Wednesday, December 28th, 2022. It's now the 27th at 5:08 p.m. Central Time. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. Not much has changed since the video for the 27th. And the S&P 500 daily chart has printed the combo and sequential sell setup 2 count, and to negate that for end of day on the 28th, there must be a close below 3878.44 for the price flip to the buy setup count 1. So it could start the day on the 28th as a buy setup count 1, but has the end of the day to redeem itself. The qualified demand projection here at 3602.86 is negated as there's another ongoing demand line at 3765.84. The propulsion 50% momentum down was not qualified today, and for the 28th there's a chance to get the 50% disqualified momentum up qualified if price can skyrocket above that and close above that level for end of day on the 28th. Let's take a look at Apple and Amazon inverse cup and handle patterns. Starting with Apple, you can see from July 2022, and it broke down under the baseline here. And the measure rule is from the handle, so the top of the handle down to the baseline, and then moved over to where it broke out to the downside, and it's 14.8%, approximately $115 per share. And Amazon is very similar, but both of them you can't buy into this until it reaches near the measure rule to the bottom, or it breaks back above the baseline of the inverted cup and handle here. That would be the only way I would get into it right now, as I know where the support would be, and if it breaks under it, that's it. But right now it's just in no man's land. If it did break above the cup and handle baseline here and gets above this downtrend line here, then we can negate the cup and handle pattern, and you can see it made it above here, but it did not close above it. It opened as a gap up and then it closed underneath it, so that doesn't count. Amazon has a little different situation. You can see the range it was in coming out of the COVID crash all the way through March or April 2022. And barring a couple of forays above the line here at the top for the range, and a few down here at the bottom, it just stayed within that range until it fell underneath it here in June. And like Apple, we're using the handle for the measure rule. So from the breakout to the downside right here, it's 45.3% from the top of the handle down to the baseline of the inverted cup and handle, and moved down. And that's another situation where you don't want to buy into it now until it reaches down near $70, where it comes back up above the inverted cup and handle baseline here. And then to negate the cup and handle, I say it needs to get back above the bottom of the range here, this thick blue line. So if it closes above that for a couple of days, then I negate the cup and handle. Here's Amazon in the DeMark daily cloud chart. You can see the wave and the Ichimoku cloud. Wave starts at A, B, and then it met the requirements for C here. and probably printed C here when it went below A, and then C has been traveling down ever since, and that leaves us to today here on the 22nd. I'll zoom into the current area now. Amazon on the daily chart has printed an aggressive sequential buy countdown 13, and the sequential buy countdown 13, also a combo buy countdown 13. And a couple more days of downside, and it will print another aggressive combo by countdown 13. It's on 11. This 13 aggressive sequential is technically still valid. It has another bar to go before it reaches the 12 bar metric, where after 12 bars any upside move is negated. It's already had his upside right here on the 13th, and that was it, so that's very lame. And this is the 10th bar after it printed, so 2 more bars and it becomes stale, and we'll just focus on this one, sequential and aggressive combo. And the combo 13 here that is printed. So there's one buy risk level here, this aggressive combo disqualified buy risk, and it ended the day qualified even though it does not show it. So to get it qualified and confirmed for end of day on the 28th, there would need to be an open lower than this close and tick lower intraday, lower than this low on the 22nd, and then close below this close on the 27th, and it will become qualified and confirmed. And if that happens, that means they could possibly go after this sequential and aggressive sequential disqualified buy risks and try to qualify and confirm those. Right now the Bollinger Band is right on top of it, so you would think that that would be good support. And a long-term oversold down has just started today. It printed at $83. So if by chance these 3 buy risk levels become qualified and confirmed in the future days coming up, that would mean that would probably be a chance of price heading down towards this qualified and confirmed 50% propulsion exhaustion down. And at $73, it's around that $70 mark here for the measure rule from the inverse head and shoulder pattern. And here's Apple looking very similar to Amazon. You can see where the C met the requirements but did not print until it closed lower over here, and it's been traveling downwards ever since, and that brings us to today, the 27th. I'll zoom into the current area now. And today, the 27th, this C shifted from over here. So we lost the 1 wave up here, and the 2 was down here. But when this price bar went lower than this price bar, the C shifted over, and the wave 1 and 2 was lost, so technically it's starting over again, meaning the up wave. And there's really nothing underneath nearby for support. And again, we're looking for 115, the bottom of the measure rule. So I shifted over to the Apple weekly chart, and you can see that the demand projection is at 116.23, so it could make it down to there, but before that is a disqualified 100% propulsion exhaustion down. And the lower Bollinger Band for the weekly, and I'm using the 39 period middle band here and 2.5 standard deviation on the upper and lower bands. The NYA top color chart, NYA to SPX ratio, basically value versus growth, has been pegged at 3.97 all day today, so it made a run up to that line right there and stopped. It did make it above it a little bit here, and the next line right above it is at 4.005 or something, and the last time that was hit was back here in March of 2021. And if we had the chart stretched out back to the COVID crash of March 2020, there's a hit there too. And since it did nose above the 3.97 area here, this line, I believe it's going to make it all the way to 4. So let's keep an eye on Apple and Amazon as this line approaches 4 if it does. And there's no doubt that the value play is way overstretched to the upside, and the growth debacle is way overstretched to the downside. However, here's Amazon and Tingo fundamentals, and you can see the EPS here, and price to earnings PE ratio is still astronomical at 74.48. It's trading at 6 times book value, and the return on equity is pitiful. It's not even keeping up with the S&P 500, which on a 5-year historical average is about 16. And the free cash flow for Amazon is in the negative section, negative 3.64 billion, so there's not much going good for Amazon. However, I did read today that somewhere in Texas and maybe California that they're testing the drone delivery on a couple of cities. So if that catches on, that could be a game changer, but it's experimental now, and they'll be looking for feedback from the homeowners that get deliveries in their backyard from the drone. And you can see over here in the thumbnail that the NYA price has been able to stay below the top of the measure rule from B to C and moved up. And this green horizontal support and resistance line here. And I'm beginning to believe that it's inevitable that we test this October-November 2020 double low over here. October has disappeared, so I notated it over here, but I believe we're headed back down to here before all is said and done, and we'll probably start the other big W from down here. Here's the HYG to IEF ratio. That's the iShares iBox high yield corporate bonds to the iShares 7 to 10 year Treasury bond ETF. You can see it improving. It's above its 50 period simple moving average, and the 50 is above the 200 period simple moving average for this ratio. It could be investors dumping bond ETFs as interest rates have been somewhat skyrocketing. They're up to 3.847 for the 10-year Treasury yield, and it could be a combination of that and people getting into junk bonds. And the MACD of the ratio had a crossover above its signal line from underneath zero, and it kept moving and is now above zero at 0.0002, but nonetheless above zero. And the KST for short term has crossed over its signal line to the upside from underneath zero. And you can see that almost every single time it does that from under zero, there's some form of advance